Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And wow, what a morning, what a day yesterday. We have lots of action. Markets yesterday falling the most on the NASDAQ since October 2022. That is a big time fall, over 3.5% in just one single day. Mega caps led the drop yesterday. Obviously, we saw Google/Alphabet and Tesla dropping, but also the other mega caps fell huge as well. And again, Meta, we talk about Amazon and Apple and the rest of them, even Nvidia taking a beating. In fact, the whole entire semiconductor space was crushed yesterday. This was risk off. This was valuations becoming a concern, worries about the economy, maybe slipping into a recession. All of these things coming and bubbling up. So let's take a look at where things are today, and we'll go over the economic data as well. This is the pre-market data on the S&P 500. First and foremost, we got two key points of economic news out today. The first one, not such a big deal. Jobless claims 237,000 versus 235,000 forecast. So basically in alignment. That's kind of right where we've been now for the last month and a half in terms of the weekly jobless claims numbers. And remember, that number is people filing for unemployment. Seems like a big number, but when you're talking about the entire country, it is not that crazy. All right, the top one here, this is the big one, guys. GDP for the second quarter revised up to 2.8%. from an expected forecast of 2%. That is a massive revision to the upside. Now, again, in the market of 3 months ago, the markets would be selling right now. Oh my goodness, the Fed's not going to cut rates. This is, good news is bad news. This is that market falling. Instead, what did we see when that GDP number hit? The markets actually went up a little bit. The reason why this happened, simply put, people are now more worried about a recession, so stronger economic data means the chances of a soft landing are greater, meaning that's what the market and investors want. They want a soft landing, which requires some good economic news to offset the bad economic news that we have been getting. All right, so this one right here today, folks, that is a big one right there, 2.8% revision on GDP. Again, it was forecast to be 2%. That may not seem like a big difference of just 0.8%, but when you're talking about the entire U.S. in terms of GDP, that is a massive differential. Okay. Looking at the spiders here pre-market, yesterday we had that massive sell-off. That's where we closed. We're trading essentially flat to slightly positive right now on the markets, getting a small bid. This morning, semiconductors were down sharply again, although they have come back off of their lows. Last I checked, Nvidia was down about $1. But I want to show you some key levels on the charts here. That's what it's all about, right? That's what the game plan is, game planning our charts so that we can make money today. Now, first and foremost, looking at this chart here, we know this is your upsloping channel. We definitively broke it yesterday. I mean, there's no even doubt about that. That nasty red candle closed way below that level. Now, the kicker is, where is the next level? And I posted this to members in Smart Money Stocks and ETFs last night. I found a trend line, and it is a trend line that the S&P actually tagged or kissed yesterday. So let's go back to the charts and draw that in. So now that we've broken this channel, I'm going to remove it, okay? We're going to take it away, and what we're going to do here is put a new trend line in play. We're going to take the low from October of 2023, right? And what we're going to do is we're going to drag this up here and right through these lows, and what we see is essentially the S&P came down and kissed this level yesterday late in the day. All right, so let's just jump back here and take a look at it. We see that the low here from October, which was really the beginning of the big latest bull run in the markets, where we just went up, up, up. We had a couple minor pullbacks along the way, but that low connected right through this zone right here, low here, low here, and low here, and look at what we hit yesterday. So the point of this is that this tells me, the charts tell me, remember, I don't tell the charts tell me that this is a pivotal level today. Can the markets recover? Can they hold strong here? If they can't, watch out below. I mean, if we take this out subsequently in a day after we just took out that prior channel level, then this would get very nasty very quickly. But again, the markets will try today, and right now we're flat to positive. They will try to hold this level by a daily close. I want to watch today's close. I'll cover it in the trading the close today at 3:55 p.m. into that 4 o'clock time frame. So that is a major level, guys. Look at the beauty of that trend line, how it all lines up so perfectly. So watch the low from yesterday on a daily closing basis. Do we close below, or does the line hold? Hold the line, right? All right. Couple other charts that we have to go over here. If we flip over to the NASDAQ 100, ultimately I still think there's a more downside here on the NASDAQ. Doesn't mean it can't get a bounce, right? But what I do have is I do have a target zone initiated. The target zone, again, is that same sort of upside trend line. It's just a little bit lower because the NASDAQ was more vertical than the S&P 500. In addition, we have this very clear little pivot top right through here, and it coexists right in this zone. So that 458 level is going to be the big test level for the NASDAQ 100 today on the QQQ. And when I talk about these numbers, I'm generally looking at the ETFs that track them. In this case, it's the NASDAQ 100 ETF, and the symbol for that is the QQQ. Okay, so let's continue on our merry way. Couple things to keep in mind. We've seen yields stabilize and even yesterday go up, and that's unusual. I'm going to tell you why. So usually when people get scared and the stock market drops, what ends up happening to bonds? People run into bonds. When people run into bonds, usually yields drop. Instead, yesterday yields went up. There's something going on here in the inner workings of the system and the financial system that should be monitored very closely. That is not usual for that to happen, where yields actually went up yesterday when the stock market was in free fall. And again, we're talking about the biggest move in essentially almost 2 years, so you can't say that wasn't a big move for the markets. It was absolutely a big move. All right, couple other things to go over here. I do want to just touch base on Tesla. I'm keeping a close eye on Tesla today for a potential day trading opportunity. This is a major gap fill right here. It's around $210. If we flush into 210, I may be looking for a day trade. Would I look to swing trade this level? The answer is no. Not yet. I have to let the dust settle. Those earnings were so bad, and again, you just didn't get enough clarity on when we're going to see the robo-taxis and all that other stuff. I would be much more intrigued by looking at this zone right down here. Notice all this kind of sideways chop right in here, and that area right there would be much more apt to be more of a swing trade long opportunity on Tesla. All right, couple other charts. We have to get into some earnings here real quick. Chipotle came out with earnings yesterday after the bell. This was traded by our traders that have the earnings trader service. They run a live trading room a couple times a week in the after hours for these earnings, and they trade them live. They did trade this one yesterday. If we bring up Chipotle, take a look at the insanity in the after hours yesterday. So Chipotle initially comes out, the stock skyrockets from essentially 51 all the way to 60. It then reverses all the way back down, bounces back up, and then has slowly faded here. Now, overall, when net is in play here, it's almost unchanged after earnings. But again, this was nuts right here in terms of trading action. So what do? Well, what we can do is say, okay, the fact that it couldn't hold the gain is not good. It ultimately tells me it probably is going to go lower. So what we do is we look at the daily chart and see, well, if it starts to flush during market hours, where will it likely go? And I do have levels marked off here. So this level right here at around $49.75 is a gap fill. That would be a very aggressive level, but that is a technical level. Next, you have this little flat top right here, right through here. That's at around $47 per share. And then the big level for me, where I'd be more interested in a swing trade versus just day trading, notice these two trend lines, how they converge right in this zone right here, between $43 and $44 per share. So if this were to come down to that point, and think about the size of that move, going into earnings yesterday, this was a 25% decline on the stock from this high right here all the way down. And I want to point something out as long as I have this chart up. One of the keys was they had their earnings the last quarter. Last quarter they announced their earnings, and the stock did go up a little bit, and then they announced the stock split. And we saw the stock go parabolic going into that stock split and just run higher, higher, higher. And you have to just remember, if you're someone that's newer to investing, you're going to hear that stock splits are the greatest thing. Oh, you got to buy it because it's going to split the stock. Remember that stock splits literally don't do anything. All they do is if you have one share and it's a 10 for 1, you get 10 shares. But the market cap of the stock does not change. There's no valuation change. Nothing changes. You just get more shares. So it drives stocks up. But as a trader, I like to short into that. As things are running up, you get an opportunity where things get out of whack. A lot of smaller investors run and jump on board saying, oh, this is going to be great. And then ultimately afterwards, it tumbles. It's a great trading opportunity, but I'm saying it more to warn those of you out there that may have thought that this was easy money to buy it before the stock split. And now you see that, again, it did split, and then the stock just comes right back in to a more fair value valuation where it likely should be. So just little rules like that actually save people a lot of money. A lot of people won't talk about that. They won't tell you about it. Certainly institutions won't tell you about it. They don't want you to not buy into it, because think about all the institutions just saying thank you so much as they're just dumping into that, right? And then once they're all out, or a majority of it, then retail starts to say, uh-oh, as it falls, and they all exit the trade. All right, let's get on to some other earnings. Ford is getting absolutely annihilated here, guys. Holy cow. You don't see Ford Motor Company dropping this much very often. Look at the drop on earnings. They basically took $1 billion loss in their EV sector. Their other sectors did okay, but that EV sector is suffering, and then they actually warned going forward. It was not a good earnings announcement and conference call for Ford. Now, what we can see here is you had the initial drop, and then it's been kind of chopping, but it's starting to head lower. I do have a level that I will be watching today in case the stock drops into it. Where is it? Well, we use the charts, right? Remember, and this is important, you know, a lot of investors, they say, oh, well, Ford's a great company. Oh, it's an American company. Oh, this and that. So I think generally at this price, it seems like a good buying opportunity, right? And I'm not saying that it's not a great American company, but what I am saying is that that's not a technical reason. That's not a logical reason to buy a stock. A stock should make you money. You don't want to buy it over here and then watch it come all the way down here and have to fight back for years just to get your money back. At least go to the charts and put probabilities in your favor. All right, so probabilities, let's talk about it. Probabilities are when you connect trend lines in technical analysis, we find that certain levels coexist together. So in this case, there's a very clear bottom right here, right? Pivot low, and then this downsloping trend line. I love where X marks the spot. It's two trend lines that come together. On oil, for instance, it gave me the top at $84 to $83 a barrel. That was an X marks the top spot. On oil, it is now trading, I think last I checked, at $76 per barrel this morning. We'll look at that in just a minute. My point is that right now we are trading down in this range here, 1180-ish, give or take. There's a lot of support around 1150 to 1140 down here, and at least at that point, even if you think it's a good American company, and it is, I'm a big fan overall, but at least you have technicals that back up your thesis of it being a good American company as well, right? So it's about kind of using the chart to guide you to where it could have support. Now, if we buy, if Gareth buys right here, does that guarantee him a win? Not at all. It still is a probability game, meaning that, yes, it puts me in the probability section of being successful, so maybe a 70% chance that I win on this trade over the next couple months, it bounces, but there's always a 30% chance that it doesn't. To do that and mitigate that risk, I'd do what's called DCA, dollar cost average, and what I would do is I'd buy a small amount here, and then maybe every 30 cents down, add a little bit more and add a little bit more, accumulating. And what you're doing is you're taking the risk, more and more of the risk out of it by being able to do that, where then at some point you do get some sort of good news and it bounces back up, putting you in the money much, much quicker. It's an amazing thing to do, is to dollar cost average, folks. It really is on the charts. All right. Next up, let's take a look at American Airlines reporting earnings this morning. Not great earnings. I think they missed on revenue. They beat on earnings, missed on revenue, but their guidance was, again, light. The stock initially dropped. It has bounced back. It's not down enough for me to be in trading this at this point. Southwest Airlines, same chart, came out, fell, a little bit of a bounce, not enough of a movement there. All right. What we're going to do now is we're going to do our drawing for the Wheel of Appreciation. And to do that here, let's go in here and run it. Yesterday, I believe, or I should say Tuesday. So yesterday we didn't get to do the wheel, but Tuesday it was a $300 credit to the VI website to be used any way you see fit. And again, right here, let's find out who wins that. GEO UE8PS. So there we go, Gio. Great job, buddy. Reach out to support at verifiedinvesting.com. All right, follow me over here. We're going to do a spin. Then we're going to get right into Bitcoin after a quick break. Let's do that spin. Awesome. This is a good one. Yesterday, the Apex Live day trading room, 7 winners, 7 for 7 yesterday. I know I only put up five fingers because I'm holding some, but there's 7 for 7. This is a great thing here, folks, and I'll tell you why. So not only is it a good thing because in general we have an amazing track record in the Apex Live day trading room, but in addition, we're on literally from 9:30 to 11 and then from 1:30 to 4. It's essentially like being in a webinar of trading where you're constantly learning. You can ask questions if you've had the Winning Trader series, if you purchased the Winning Trader series, and it's almost like a workshop every day of the month. And so that's one of the reasons why people say, oh, well, it's, I don't have enough money to trade or this and that. Totally understand that. But at the same time, think about the amount of knowledge. Ask anyone in there. The amount of knowledge that you get from being in there is incredible. From a trader's perspective, we now have 3 or 4 traders on in the morning session looking and scanning. We actually have a scanner now that we're debuting for the live trading room that scans the market for us, and all of these amazing things. All right, speaking of scanners, the Lux Algo Gareth Soloway Verified Investing Topping Bottoming Tail Scanner is now available at Lux Algo. Go below this video on YouTube and you'll see the link right there for Lux Algo. Go there and check it out. I'm telling you, it is so cool to see the signals pop up on the chart. The buy signals, the short signals, and it basically guides you through the high probability trading opportunities there for topping and bottoming signals. Very cool stuff. Check it out, guys. It is, I think it's only like $29.95. It's not expensive whatsoever, and it goes right on TradingView. Right on TradingView, which, by the way, is another sponsor of ours on the Wheel of Appreciation. I always love the sponsors that are here because, again, it shows you that they want to give back to you guys as you guys support us, and that's awesome. All right, so we're going to take a quick 30 seconds to thank Lux Algo for their support. Here it is.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, we are back, and look at Bitcoin. Bitcoin is beginning to fall here. Now, this is very intriguing on Bitcoin. I'm going to tell you why. So what I've talked to my members in Smart Money Crypto about is that you have what's called a pivot line. And a pivot line basically means that when you're above the line, chances are eventually it bounces and goes higher. If you're below the line, it's a warning sign to be careful. There might be more downside. Well, one of the levels here, the pivot line is very clear. You can take it right through here. Okay, right through here. So, and again, I'm drawing it in freehand, so it's not perfectly straight, but that's okay. The idea is when you were trading down here, here it was, and once you broke, notice how it broke and retraced to the line right there before falling all the way down there. So that's the first signal. It's a pivot line. The next signal is that when we came back up and we went through, we did a check back here, and then we went higher. Notice how on either side of the pivot line, it essentially retraced to it and actually was rejected each way. And so the idea here is very simple. As long as Bitcoin, even if it comes down and touches this, as long as it doesn't get below this line on a daily closing basis, you would favor a move up, right? The bias, the probability, which is what we talk about. Everything I talk about is all about probability, right? The probability would be favoring the upside. However, if we saw a drop and it actually closed below the line, if it closes down here, it opens the door to a move down, just like right here, right? So you have to just watch this level. The level, I believe, is right around 63,000, give or take. Let me just double check on my chart. I want to make sure you guys have an accurate level. Yeah, around 63,300 is what I would call the pivot line. So watch this very closely right here. Right now, as Bitcoin comes down, you know, no bull wants to see it come down, obviously, but it is what it is. It's doing price is always truth. Price is coming down. you want to see it hold that line right there. All right, so again, we'll watch this throughout the day. I'll update you at trading the close today at 3:55 p.m. Now, let's go to Ethereum because Ethereum's not looking too good here. Ethereum is getting absolutely annihilated today. Look at this drop. Yes, I am short with Smart Money crypto members, kind of understanding that this was the likely scenario. And again, the ETF launched. They had inflows of about $100 million day one and then outflows, I think, of $108 million yesterday. That's not the greatest to see more outflows on day number two than on day number one. In any case, look at the fall that's coming in here. Big drop to the downside. There'll be a little technical support right here. But ultimately, you're probably starting to look back at the $2,900 to $2,800 level on Ethereum. So again, just watch that. See it come down. We're about 10% in the money with Smart Money crypto members. We'll see again where we want to take profits on that. Gold today is getting hit. Beautiful drop on gold here. Notice it did tag this little upsloping trend line at the lows today. That was our key technical level. We talked about, was this making a bearish pattern? The answer ultimately is now yes. It broke down, but it did tag technical support. I actually nibbled on a little bit of gold in Smart Money commodities today, right at this low right down here, just because it's the chart, right? I want to be clear on this. Anytime I take a trade in my services, there's technicals behind it. It's not just arbitrary thinking. I think there's too many people out there on social media that just say, oh, I love this, or oh, I bought this. There's nothing behind it. The probabilities are what it's all about. Learn your probabilities, folks, and that is through technical analysis. Silver, wow, what a drop on silver as well today, guys. Silver broke a major technical level. Take a look right here. Here we came down, a little sideways chop, which is that bearish consolidation that we should all know. And then look, once this broke, the floodgates opened. Now, what does this mean? Well, in general, it probably means we're headed down in this range right here, right around anywhere between 26.50 and 26. That's going to be right in this lower range. And again, that would be where I would say that will be the next technical level. I know no one wants to hear if you're a bull on silver. And I know there's a lot of bulls on silver, but the only way that changes this target is if it can recover and get back above this pivot line, right? So you now have a very clear pivot line right through here. Price was above it, came back in, now it's broken. Now this is going to become resistance, and it has to get back above to now flip bullish again on the charts. All right, last couple charts that I just want to go over. Oil continues to decline here. I've been bearish on oil for a long time. Remember earlier today, or at the beginning of the game plan, we talked about X marks the spot right here. See the X right there? That was a hardcore sell signal. And look at what oil has done since, and that's the target. Still remains around $74 per barrel. And then lastly on natural gas, as we just flipped to that, natural gas is coming in. So far, a very minuscule bounce on the charts, right off the level, but now it's coming back in. So what do? As technicians, we watch to see, does price hold this line or does it break below? If it breaks below, watch out below. It could get another big sell-off, likely well below $2 on natural gas. All right. I got to get to the trading room, guys. Apex Live day trading room, insanity yesterday. I come out of those like a fighter after like 10 rounds, right? I mean, it's pretty incredible and intense, but again, very, very profitable. So that's what it's all about. And again, it's all about those charts. Thank you guys so much for tuning in. I'll be back at 3:55 today for trading the close. Again, have a wonderful day. Trade well, folks. Use those charts or learn those charts. Take care.